Hey guys, it's Steve with Futures and Charts, and today it's Wednesday, and it's about 8 o'clock. Um, and just taking a looking at the crude market and diesel, and so far we are up about 92 cents on crude oil and about 1.3 on the diesel. So I think we might as well let me read the headlines on why we're up today. And it says crude prices finish higher on dollar weakness. So this is basically from yesterday's close. I don't see any new headlines. So it's still kind of having a bit of an update today. So, um, but let's go look at the charts and we'll see if we can figure out why we're up and if it's going to continue this way. And we're heading into what should be the busy season. Um, we do have refineries that are shut down for maintenance, and that usually creates a bit of a backlog in crude oil in the U.S. anyway. So it's just a kind of a balancing act right now, where we might show that there's downward pressure possibly on crude because there's going to be more of a build and and then drawdowns in the product. So, but well, let's just go have a look at the chart and I'll kind of explain what I'm thinking here. So, um, let's look at it.
Okay, so the main thing I'm looking at here, this is the US dollar index, and the dollar was really strong at the beginning of the year, and it's gone downhill ever since then. And I know Trump was talking about wanting a strong dollar, but a lot of the things that they're doing is causing it to actually go down, which if you're a farmer or a oil producer, this is kind of what you want, because a weaker dollar usually translates into higher commodity prices. So, which isn't going to help the inflation end of it, but as you and I both know, commodity prices, I mean, other than the feeder cattle market, wheat and all of these things, let's just take a look at the wheat market. The wheat is, I mean, it's just in a terrible spot. So it needs something to get it back up there to where it's actually worth producing. So, and of course, obviously, if you're a producer, you have no choice. So we need to get these commodities up and get it to the point where we can actually, make some money, keep the banker happy. And so a weak dollar is going to help that. So if in fact that the dollar continues to weaken, then the commodities will probably start to move up. And it's kind of a seasonal thing as far as diesel and stuff like that is concerned. And as you can see, we've been in a really steep downtrend. This is the New York Harbor diesel contracts. And so we have just broken out of that downward trend. And whether we stay there or not is, it could still trend downward. It's so steep, it could still trend downward above this trend line and still not very good as far as, well, good if you're a buyer, I should say. but I just have a feeling with the dollar being down, and let's go back to that for a second. This is where it kind of took a little bit of a breather after a run up it would have been last November, first part of November, and it hit a low of about 103.40 roughly, and basically that's where we're at now. So it could be that it trades sideways a little bit here before it tries to go back down and test par at $1. So or even maybe just slightly above it, but. If the dollar does weaken that much, you can bet that commodities will probably be headed higher. So that could be good news for producers. So let's take a look at the markets one more time and get rid of the advertisement. Yeah, we're up about $1.103, and diesel's up 1.50 today. So it's possible that we're going to have, sorry about that, wrong tab. We're going to have a little bit of a bounce here with the dollar dropping. So anyway, that's what I got for you today. Hopefully this is good news for commodity markets. We need to see a bounce. It's really affecting a lot of industry. Like the implement dealers are not moving very much product. Which stands to reason. It affects a lot of different businesses. Even our end of it here, the contract sales have been down because really nobody knows where this is going, and they're hoping it. If you're a buyer of diesel, you want it to go down going into the spring so you can buy it cheaper. Especially with wheat being down, you got to have your expenses be lower as well. So, but we may be at a point where things are going to start turn a little bit higher. And if we traded sideways in here in this range, and didn't have any spike hires and stuff like that, that's kind of a good thing. At least you know where your expenses are, and that's not a bad thing. You can plan for that. So anyway, like I said before, this is what I got for you today, and thanks for watching, and we'll see you in the future.